Okay, dear students, this is Mustafa Mirchawala, your TX trainer, and today we are going to discuss pre-mock for TX December 2024 attempt. Okay, right? Uh, Before we move on, let me inform you that I have recorded some questions of pre-mock for F7, FR level, and strategic business reporting level as well. Okay, so if you want to see those lectures, you may see as well. And also, I have posted many lectures of TX, FR, and SBR in my YouTube channel, and many students got benefit from that. Okay, so you can better avail it. Now, for your motivation, I have shared some of the latest scores, recent scores. You can see 94, 90s, 80s. A lot of students scored 80s, 70s. So these are the scores of recent attempt, although I have pasted few pictures here. So if these guys can do this with the same course they studied, with the same strategy they followed, with the same instructions they followed from me, so you can also do it. So be confident, it's not difficult. TX has got very good pass rate. In the last attempt, the global pass rate was around 50 something, but my pass rate was 88%, 88% as sent by the ACC team, the data they sent. So we calculated it accordingly. So it was 88%. So it's very good pass rate. Okay. So now, without wasting a single minute, let's start with the section C thing. And this is the question, in section C of TX, you get three questions. One is of 10 marks, the other one is 15, and then again 15. Okay. So first we are going to do this 10-mark question. You should assume that today's date is 15th of March 2023. On 6th April 2023, John will purchase a residential freehold property which he will let out. Okay, so he is going to rent out the residential property. Okay, now what they are saying, that however John is unsure whether to purchase the property personally or via limited company. So there is a first option. Obviously it's a planning question, so there is a first option that he can directly buy on his own name as an individual, or number two, he can incorporate a limited company and then this limited company will buy this property. Okay, the limited company would be incorporated for the sole purpose of purchasing and letting out the property. John would hold all the shares in the company. Okay, that means 100% holding. 100% holding by John. 100% holding by John. And one more thing, it is written that the limited company would be incorporated for the sole purpose. That means this rental income will be the only income for that limited company. Okay, be careful. Regardless of whether the property is purchased personally or via limited company. Now these are some constant things in both options. Constant things, the property. Now we need to calculate property income. And if we will conduct this business as an individual, then the individual income individual income rules will be applied on property income. And if we are doing as a company, then for corporation tax rules of property income will be applied. The property will be let out throughout the year ended 5th April 2024 at a monthly rent of 3600. So 3600 multiplied by 12, 3600 multiplied by 12 will be your rental income. The purchase of the property will be partly financed with a repayment mortgage. Be careful, loan. Mortgage interest of 15,000 will be paid during the year ended 5th April 24. Now be active. If you remember, this is a separate special topic. If you are an individual, listen, if you are an individual and if you have taken loan to buy a residential property or renovate or repair a residential property, then that loan interest won't be deducted. From the individual's property income P&L. Instead, you will get a relief on the basic rate. You will get a relief of that interest expense on the basic rate in the end of the income tax calculation. Hope you remember, in the end you get 20% tax benefit. Okay, so it's not allowed expense from P&L, individual property income P&L directly. You will get the relief in the end. But yes, For companies it is allowed expense. For companies it is an allowed interest expense, right? But you will see in this question you don't need to do any corporation tax working. You will see soon you will see that you do not need to do any corporation tax working, because examiner will be ready-made give you property income things, sorry, corporation tax things. The other expenditure on the property for the year ended 5th April 2024 will amount to 5,600, and this will be allowable. So it's an allowed expense. Yes, this 5,600 will be deducted. This 5,600 will be deducted from property income. This 5,600 will be deducted from property income P&L of this John. John will also have employment income of 70650. Yes, this will always go in the John P&L. This will go in the John income tax P&L, individuals P&L in both cases, whether you are incorporating a company or whether you are doing on yourself. Okay, this is the individual income. Employment income is received by John because John is doing a job somewhere else. Okay. Now, if the property is purchased via limited company, then the company's corporation tax liability for the year ended is 4294. That's a good news. That's a very good news. Listen, that's a very good news. 4294, very good news. So you do not need to calculate any corporation tax liability. My dear student, you do not need to calculate any corporation tax liability at all. Any corporation tax liability, it is already given, ready made. Okay. John will withdraw dividends from the company totaling 7,000. Yes, whatever dividend John is receiving as a shareholder, yes, that dividend income is a taxable income. In the individual tax computation, dividend income is a taxable income. But yes, when the company is giving dividends, it's not an allowed expense for the company. Okay, right? So be careful with this thing. John will not have any other income in the tax year 23-24. Okay. Now, determine if there will be an overall tax saving of tax for the year ended 5th April 24 if John purchases the property via limited company rather than purchasing it personally. Don't worry about it. Very easy question. We can easily do it. Okay. I would first recommend you to take a picture of the question. This is my first recommendation, to take a picture of this question, because soon I'll move the screen and I'll shift myself to the software and the Excel part. Okay. So at that time you won't be able to see the question for a few minutes. So it's better you take the picture. Now listen. First, let me explain you here. The first option number one, is he is an individual. He's receiving directly, he's buying property directly, and then he will have a property income. Yes, property income we'll calculate, and employment income, just two incomes. In this case there will be no dividend income, because right now he's directly owning the property and directly receiving property income. So using these two, you need to calculate normal income tax liability, you know that. Okay. Now in option number two, this is the guy, he'll first incorporate a limited company and he has 100% holding. Okay. So now, first of all, this is an artificial setup to save tax. First of all, company will pay corporation tax. And that corporation tax in this question is, see this, 4294. Now let's see what are the incomes for this individual. Again, this individual is earning employment income because he's doing job separately. This individual will have employment income because he's doing job separately. Now this individual will have dividend income from company, and you need to calculate tax on that dividend income also. Now, as a student, you may ask the third question, sir, in this second case, in this option number 2, will this guy have any property income? No, because property income is inside this company's box. All the property is in the name of company, and yes, company has calculated the property income. Even the company has calculated this corporation tax. So in this corporation tax, property income tax is also included. Okay, right? So in this second scenario, in the end when you will be calculating total taxes, so one tax is 4294, one tax is 4294, and the other tax you need to calculate income tax liability using employment income and dividend income. Employment income and dividend income. Okay, so this is how you will approach these two. This is how you will approach these two. So my respected students, the first request, please read this question. If you want to pause the screen, pause it and read it. Read it. You can process it. You can process it, better process it. As these are last days, you guys are also full of knowledge now, definitely. Now, there is one theory requirement. Let me explain this requirement first, and then I'll move to the final round of Excel. Explain one way in which the calculation of future taxable gains CGT gains on a property disposal made by a limited company would differ from the calculation of a taxable gain on a disposal made personally by John. Can anybody tell me what is the difference between I have made slides, I have made videos on it, the differences between individuals and companies, differences between individuals and companies. Okay, so in that case, should I tell you, for individuals annual exemption is allowed, for individuals annual exemptions are allowed, but for companies no annual exemption, no annual exemption allowed. Now, as a student, you may say, sir, for companies, we normally get indexation allowance. Yes, we get indexation allowance, but there is a condition. If you have bought property, before 31st December 2017, if you have bought the property before 31st December 2017, and in this question, you have bought property after 31st, recently you have bought property now, that means after 31st December 17. So here in the company's calculation, no indexation allowance is allowed. Okay, so this is the reason you will see a difference of gain calculation. Obviously tax will also be different because the tax rates in individuals and companies are different, but they are just talking about the gain. So yes, the taxable gain will be different in individuals and companies because of annual exemption. Very basic question. Because of annual exemption, just 1 mark. Just 1 mark. Okay, so moving towards Excel part. So be active now. Be active now, dear students. Okay, so I think you can see it properly. So the first thing is the A requirement is purchase personally. Now we are thinking, be active, you will understand. We are thinking that John has personally bought the property. Okay, so now we need to make the P&L of John. So how much is the rental income? 12 months are there in a year. So 3600 per month is the income, multiplied by 12. 3600 multiplied by 12. Okay, 43,200. Now then mortgage interest is in individuals. If you are an individuals and if you have bought a residential property and you have taken loan for that property, it's not allowed right now. It's not allowed. Yes, in the end of the tax computation it will be allowed. Other expenditure is, I think, 5600. Okay, so finally we can easily in seconds you can calculate property income. 37,600 is your property income done. Okay, now let's start tax calculation. See, this is the tax sheet. Now just for your easiness, just to save the time, because these are last days, I've already written these notes, okay, these headings, because it's not my objective to teach you how to type these headings. That's not my objective. Okay, but in the exam you need to write yourself. Now employment income is how much? It's 70650. Okay, then property income, just pick it up. Property income, now just if you add these two, you will get total income, and as there is no qualifying interest paid in this question, so it will be net income. Now you will take this net, and now you will start side working. Now you will take this net income, you will take this net income here, you will take this net income here. Now my dear student, one important thing, that this net, there is no qualifying donations, there is no gifted donations in this question, and there is no personal pension contribution paid. That's why your net income will be your ANI. Your net income will be your adjusted net income, ANI. Okay, now open your eyes. Your ANI is 108250. Your ANI is 108250. That means it is more than 100,000. It is more than 100,000 and less than 125140. So we need to do reduction working. We need to do reduction working. See how much it is extra. It is excess by 8250. Now you tell me what's the normal personal allowance. Normal personal allowance is 12570. Now we need to do some reduction working. Equal minus this divided by 2. Excess divided by 2. It's 4125. So you can see the available adjusted personal allowance is 8445. Adjusted available personal allowance is 8225. Okay, so now you will fix this 8445 here, 8445 here. Okay, so finally what's your taxable income? 99805. And yes, this taxable income is pure non-saving, because there is no any other income. Property income and employment income both are non-saving. My dear students, respected student, you guys are no more kids now. You are at the end of your course. Just think now, non-saving income, now apply the tax rate. There is no way we'll extend the band. No, nothing to extend the band, because no gifted donations and no personal pension contribution by the individual. Okay, so the first band is 37,700. So out of 99805, 37,700 into 20%. So equal 37,700 times 0.2, 20%. Okay, now out of 99805, you have calculated tax on 37,700. So now the excess will be in the second band. The excess will be in the higher rate band, and on the higher rate band you simply apply 40%. So this will be 99805 minus 37,700, bracket close, multiply by 0.4, 24852. Okay, now be active. Remember I told you that the 15,000 mortgage interest is nowadays not allowed from property income PNL of individual. It will be allowed in the end of tax computation. You will get basic rate benefit. So 15,000 was the interest, multiplied by 20%, equal to okay 3,000. So your income tax liability is 29382. This is the number is very important, 29382. Almost 4 to 5 marks we have done here. So if John buys the property with his own name as an individual, the tax liability will be 29382. 29382. Now second case, my dear student, second area. I'm sure you guys got it. It's not abnormal thing. Now the second area, purchase via limited company. Purchase via limited company. If you buy through a limited company, again you are doing the same external job, so employment income will be remain same. Employment income is 70650. Employment income will be 70650. Now you will have a dividend income of 7000. Okay, so let's calculate the total income. This 7000. Okay, and if you add horizontally it will be 77650. Okay, now very common sense thing, your 77650 is less than 100,000. This time your ANI is less than 100,000, my dear students. So your personal allowance will be 12570. Personal allowance will be 12570. And yes, personal allowance is always deducted first from non-saving. If anything is left, then it goes to interest and then dividend income. So complete personal allowance will be deducted from non-saving. Okay, so now let's start. You have now non-saving taxable income of 58080, and then dividend income is 7000. So first let's calculate tax on non-saving. So non-saving is 37,000. On non-saving, the first band is 37,700, but your non-saving taxable income is 58080. Obviously your first band will be completely utilized. It's 20%. Okay, see this. Now out of 58080, just use your common sense, a little brain. Out of 58080, you have just calculated tax on 37,700. So 58080 minus 3700 will attract a tax rate of 40%, because in non-saving income the tax rate for second band is 40%. So this will be equal to, bracket open, 58080 minus 37,700, bracket close, and times 0.4. Okay, 8152. Okay, now you have calculated complete tax on non-saving income. Now the next number is dividend income. Obviously the first band is consumed, the basic rate band is consumed. Very easy, whenever you are calculating tax on dividend income, always you apply NRB first. NRB, nil rate band, and the nil rate band for dividend is 1000. So 1000 multiplied by 0% is 0. And out of 7000 dividend income, we have just calculated tax on 1000. So remaining 6000 will attract a higher rate dividend tax rate of 33.75. so this will be equal 6000 multiply 0.3375. Okay, 2025. So let's calculate the income tax liability. 17717. Okay, now if you remember my sketch, so you can do it now. First see the screen, settle down. Okay, now finally, we need to compare the two options. In the first option, if you go with the first option, you will buy property on your name, and this will be your total tax 29382. Okay, so we will write it's B20, cell number B20. Okay, 29382. But if you purchase it with the name of company, now listen. So first company will pay tax. Remember, company will pay tax of 4294. Remember, first company will pay tax and then this individual will pay tax. So 4294, company will pay 4294 and individual will pay 17717 plus 17717 plus 4294. So this will be 22011. Now how much is the tax saving? With the company's route there is a less tax. So how much is the tax saving? This will be this less this. 7371 is the tax saving. This is the final answer. 7371 is the tax saving. 7371 is the tax saving. Okay. Okay, I hope you got it. It's not a difficult question. So let me walk through. This is the first option. If John buys the property on his own name and works as an individual, then this will be the calculation. And if John buys this property with the name of company, then this will be the calculation. Open your eyes, not difficult. And finally, this is the end remarks. This is the tax saving of 7371 if he buys through company. Okay, so let's move to the second question now. Okay, dear students, so now we are at question number 2 of our mock exam. And this is a 15 mark requirement. So George is a finance director of Quick PLC, a consulting firm. The following information relates to the employment income. So it's a pure hardcore employment income question. Okay, now just focused on employment income. You have to calculate. You are doing a job, you are an individual doing a job, so you need to calculate employment income. Okay, so keep the employment income P&L in your mind. George is paid director's remuneration of 9,000 per month. So simple, do it, 9,000 multiplied by 12. Okay, so this will be your salary. Now, during the year, George paid 150 a month to selected charities under an approved payroll giving scheme. Yes, now be careful. In employment income, when I teach in the class, I say this loudly many times. There are two major things. One is benefits and the other thing is deduction. One is benefit, and the other thing is deduction. Benefit is the thing which employee is receiving normally from the employer normally. But the deductions are the things which are normally paid from the pocket of employee, or whose burden is going to be borne by employee. Okay, so this point number 2, I'm writing, circling it. It's a deduction. And yes, it's an allowable deduction. Charitable, hope you remember this name, charitable donation under the payroll deduction scheme. So this 150 times 12, I think we'll calculate it. It's an allowed expense. Right? Okay, from 6th April 2023 to 31st December 2023 means first 9 months of our fiscal year. George used his private car for business purposes. Okay, so George is using his own private car for the business of employer. During this period, he drove 15,000 miles in the performance of duties. Yes, these are business miles. Okay. And Quick PLC, for which the company paid an allowance of 40 pence per mile. Very routine transaction. Whenever employee drive his personal car for the business of employer, so first thing is he receives something from employer. So first of all, we write amount received. First of all, we write amount received, and this is, let us say, full-time taxable. Amount received will be 15,000 multiplied by 15,000 multiplied by 0.4. Okay, so this is 6,000, I think, right? This is amount received. Now, as this employee is using his own car, private car, for the business of employer, so this car will wear and tear, oil change, rubbing, polish, there are many expenses. So government tax department does not allow the actual cost. Tax department does not allow the actual cost. Tax department just allow you a mileage allowance. Yes, they allow you a mileage allowance. So for mileage allowance, the rates are fixed. Mileage allowance, the rates are fixed. For first 10,000 miles, it's 0.45. For first 10,000 miles, it's 0.45. Okay. And for the excess miles, it's 0.25. Okay. So these two will become allowable deduction. These two will be allowable deduction. So this is full-time taxable and this is allowed. So you can calculate the net amount. You can calculate the net amount, and yes, I'll be doing it on the Excel sheet. I'll be doing it for the Excel sheet. I repeat last time, whatever amount you are receiving from the employer, it will be added. See, this 6,000 will be added, and then the mileage allowance will be subtracted. That's it. Okay. Now the next thing. From 1st of January, to 5th April, last 3 months of the fiscal year, quick PLC provided, employer provided. So it's a benefit. Now it's a benefit. George with a diesel company car with a list price of 43,000. The car was purchased by the company at a discounted price of 38,000. No, we won't be using 38,000. Hope you remember the law. Always take list price before trade discount, before discount. So 43,000 will be used. Now George, again a dodge. George means employee contributed 6,800 to its purchase. This is called capital contribution by employee. So you remember, it will be allowed from the cost of the asset. Wait, you need to make a cost of the asset, cost of car packet. So first of all, you write list price, which is 43,000. There are no accessories in this question, but yes, less capital contribution by employee, capital contribution by employee. The max you can less is 5,000. Remember, there is a cap of 5,000. So although in reality employee paid 6,800, but only 5,000 will be allowed. So 43 minus 5 is 38,000. This is your cost of car. This will be your cost of car in this question. This will be the cost of car in this question. Okay, dear students, now it has an official CO2 emission rate of 162 grams per kilometer. This car does not meet RDE2 standard. I call it, it's a bad diesel car. It's a bad diesel car, remember? So 162 grams, if you round down, it's 160. You will deduct 55 from this. So 160 minus 55 is, I think, 105. Now for 50, as it's a bad diesel car, so till 55 you will have 20%. Till 55 you have a base rate of 20%, 4% extra. And 105 divided by 5 is 21. 105 divided by 5 is 21. So 20 plus 21 is 41%. 20 plus 21 is 41. And you know, this 41% is greater than one threshold of 37%. So whenever these percentages are coming greater than 37, you lock it at 37%. So in this question, for the last 3 months only, see, this is very important, be careful. See, from 1st January to 5th April, from 1st January only for the last 3 months, car benefit will be calculated. Car benefit will be calculated for last 3 months. Your cost of car is 38,000. As I have, you can see on the screen, I have calculated the packet of cost of car, and your percentage, your relevant percentage is 37%. Relevant percentage is 37%. You can see on the screen. Relevant percentage is 37%, which you can see on the screen. Okay. Okay, dear students. Now the last thing. Quick PLC also paid for all the running costs, including fuel for private journeys. So yes, for the last 3 months, you need to calculate fuel benefit as well. You need to calculate fuel benefit as well. Okay, there is a fixed constant number. I hope you remember it. I'll show you now. One very easy benefit, number 5. George was unable to drive his car for 2 weeks during February 2024. That means last 3 months. Last 3 months means last 3 months car was given for private use. Car was given to you to employ for private use. So in the last 3 months, see, February 24 comes in the last 3 months. So George was unable to drive his car for 2 weeks during February 2024 because of an accident. So Quick PLC provided him with the chauffeur. Chauffeur means driver. Chauffeur means driver at a total cost of 2,000. Yes, this 2,000 is full-time taxable. If you are giving a driver for private use, then the salary of that driver, it will be a full-time taxable benefit for you. Driver is full-time taxable benefit. I hope you remember my lectures. I hope you remember the lectures. I hope you remember the lectures. Okay. Now question number 6. I love it. Lovely, lovely, lovely. See, this is a very dodgy part. It's a dodgy part, a non-routine thing they have asked. In 2021, open your eyes. In 2021, George, like 3 years back, George was provided with a laptop computer costing 2,500, primarily for business. See, this is the game changing line. It's not for private, it's for business purpose. So if any asset is given to you for business purpose, that means no private benefit. So there is no usage benefit. Remember in the class I taught you usage benefit is 20%. For assets other than car for private use, like furniture, laptop, any electronic item, if your employer is giving you any electronic item or furniture for private use, there is an annual usage benefit of 20%. But remember, it's for private use. Here in the question it is written business use. Okay. So in 2021, George was provided with a laptop computer costing 2,500, primarily for business use. The machine was replaced. See, this is the date in our fiscal year. This machine was replaced on 1st January 2024 with a new equipment costing 2,000 pounds. George purchased the first computer from the company at 31st December 2023 for 60 pounds when the market value was 250 pounds. Yes, there is a gift. Yes, there is a gift benefit. Now use your common sense. When you guys were taking the class, relax. When you guys were taking the class, we teacher teach you that for gift benefit you need to do two workings. Higher off. Remember, first thing is 250 minus, calculate the gift from here. 250 is the market value. And the consideration is 60. So this is the first working. The other working you guys used to do is the NBV working, cost less original cost less taxable usage benefit to date of that 20%. But in this question, that other working is irrelevant. My dear students. Why? Because it is written, they have given you for business use. The usage is business, not private. Wait, let me make the sketch. See, Since 2021, sorry, it's 2021, right? Yes. Since 2021, they gave you this computer of cost 2500. Listen. So you were using throughout till 31st December 2023. Okay. But this period, no usage benefit, no usage benefit. Why no usage benefit? Why no usage benefit throughout this period? Why no usage benefit throughout this period? Because it's pure business use. When you guys were taking classes, when you guys were attending normal classes, this portion was private use, but now it's business use. So if you want to calculate gift, just see the market value, which is 250, and the consideration paid by employee. Consideration by employee is 60. So yes, there is a gift benefit of 190. That's it. That's it. And once again, employer gave you another asset costing 2000. Costing 2000 again for business use. Again for business use. So no more usage benefit at all. No more usage benefit at all because of business use. Pure business use. Only gift benefit will be calculated. Only gift benefit will be calculated. This is a different thing in the mock they tested, and thank God you are doing this mock. Okay, so only 190. Only gift benefit for point number 6. This 190 is the gift benefit. I'm telling you right now because soon I'll move the screen. Soon I'll move the screen. Now, second last. Quick PLC. This is the piece of cake. Point number 7 is enjoyable piece of cake. You know, when your employer gives you accommodation, you have maximum 3 benefits to calculate. 3. Number 1 is annual value. Number 1 is annual rateable value. Here it is. See, annual rateable value. Here it is. See. So this is the first thing which is taxable. Number 2 is additional benefit. Additional benefit. Remember, for additional benefit, always you need to check the gap between. You need to see the gap between date when employer is bought, date when the property is bought by employer, and when first provided to employee. When the property is bought by employer and when first provided to employee. See this date. The property employer bought it in 1st January 2020 and he gave to employee on 2012. So it's 12 years. Sorry. Employer bought it in 2012. Employer bought it in 2012 and he gave to employee for 20 on 1st January 2020. So it's 8 years. So gap is 8 years. Gap is 8 years, which is greater than 6 years. Gap is the gap between when bought by employer and when first provided to employee is 8 years. Open eyes. So 8 years are greater than 6 years. So now you don't need you won't take original cost. You will pick this market value. This market value will be used for the calculation of additional benefit. This market value will be used for the calculation of additional benefit. Okay, and you know the formula. The formula is 230,000 minus 75,000 into 2.25%. See, this is the additional benefit. This is how. 230,000 minus 75,000 into official rate of interest, which is 2. Okay, that's it. So 2 benefits given in the question. One is additional benefit, and the other one is annual value or rateable value. Both are full-time taxable. Both are full-time taxable. Both are full-time taxable. Now the last but not the least, point number 8. You know, employee contribution in occupational pension scheme. Employee contribution in occupational pension scheme is allowed, but employer contribution is a benefit. is a benefit for employee, but it is an exempt benefit. Exempt benefit means do nothing, don't do anything. See, George was a member of Quick PLC occupational pension scheme into which he paid. He means employee. He means employee. Okay. Employee paid contributions amounting to 6% of his salary each year. Each year, 6% of his salary each year. That means 6% of the yearly salary. 6% of the yearly salary. Yes, this is allowed expense. Now let me change the color. Now they are saying this line. Quick PLC means employer. Quick PLC means employer. Employer. Employer also paid contributions on his behalf amounting to 12% of his salary. This is exempt benefit. This is exempt benefit. So you don't need to do anything with the exempt benefit. You don't need to do anything with the exempt benefit. Okay, it's do nothing. Okay, now simply calculate George's income tax liability. So simple go for income tax. First you need, if you want to calculate income tax of an individual, so first you need to calculate incomes, and in this question there is only one income, which is employment income. So make an employment income P&L first, and then finally that employment income will be your non-saving income. Then finally calculate tax on non-saving income. Finally calculate tax on non-saving income. I would like to say that this question is very simple, very simple. I have explained you almost everything, but yes, I'll get it solve you on the Excel as well, right? Definitely. Okay. Please take a picture of this question because I'm going to move the screen. I'm gonna move the screen. You won't be able to see the question if you don't take the picture. Okay. So I'm moving on the Excel part, and let's do it. It's easy. Okay. Now we are moving towards this area of George. Okay, so the first thing is we have to calculate employment income P&L. For employment income, your salary will be 9,000 multiplied by 12 equal 9,000 into 12, 108,000. Okay, in the brackets here you can also write like this. Okay, you can write like this. Now then you have some allowed expense in the note number 2. Remember, charitable donations under the payroll deduction scheme. Charitable donations under the payroll deduction scheme, which is 150 per month multiplied by 12 months. 150 per month multiplied by 12 months. Okay, then let's do the deductions here. Now employer's contribution in occupational benefit scheme is exempt benefit. For exempt benefit you write 0. Exempt benefit you write 0. 0 means do nothing. But yes, employees contribution in occupational pension scheme is allowed expense. So it was written, see the last point, the point number 8, I think it was written that employee is contributing 6% of the annual salary. So 108,000 is the annual salary multiplied by 6%. 108,000 is the annual salary multiplied by 6%. 6480. Now let's calculate this first part. Okay, now let's jump into the mileage benefit. Okay, so this is the working. Remember, listen, first of all, he drove the car, so employer paid him 40 pence per mile. So he received some amount. That amount is full-time taxable, and that amount is 40 pence in this question. So equal 15,000 into 0.4. This is full-time taxable, and then you will have mileage allowance. You will have Mileage allowance 10,000 multiplied by 0.45, it's for 4,500 and 1250. So 4,500 and 1250, this makes 5,750. So mileage benefit will be, if you want to calculate the net amount, see, it's 250. 250 is the taxable amount, positive amount. It will be added in the employment income P&L. 250 will be added in employment income P&L. Okay. The cell name is I63. Cell name is I63. Okay, 250. Now the next thing is we need to calculate the car benefit. We need to calculate the car benefit. I have already taught you. Dear students. So let's do the working. First of all, this is the cost of the asset packet. Remember, 43,000 is the list price before trade discount, less capital contribution by employee. Although the capital contribution is 6,800, but it is capped. It is capped to 5,000. So this will be 38,000. And then you remember that we calculated the maximum 37%. 37%. I'm not doing working here. I have already taught you. So cost of car is 37,000 multiplied by 37%. The cap. Remember, because the percentage was coming 41. 41% was coming. I just taught you, innocent students. I just taught you. So now car benefit will be equal 38,000 times 0.37 times 3 divided by 12. 3 months. Okay, only 3 months benefit. Time apportionment is very important. It is written, or last 3 months you get this. Now fuel benefit, yes, employer provided private fuel as well. So 27,800 equal 27,800 into 0.37 into 3 divided by 12. 25715. Okay, then chauffeur, car, driver. In the last 3 months he received a driver, and driver for private use is full-time benefit. So 2,000 was the salary of driver. It is full-time taxable for us. Then remember the laptop, the gift of the laptop, listen, see, initial period, everything for business. So no more usage benefit, but yes, the gift benefit is market value at the date of gift. The market value of this laptop is 250, but employer gave it to employee for 60. So this will be 19019. Remember, 250 minus 60, 190. So only 190 is your taxable gift benefit, no other thing. Remember, I just explained you on with my pen. 190. Okay, now for living accommodation, annual value is I think 10150. Annual value is 10150. And then you have additional benefit. I've already explained you will be taking the market value. So it will be bracket open to 30,000 minus 75,000 bracket close into 0.0225. okay, 3487.5. It's correct. Okay, so finally all the benefits are done. Let's add it up. Wait. Okay, now let's total it. Or I have one more idea. We have done calculation till here. Okay, we remember we did calculation till here. So 121,884. 121,884. Correct. So the next thing is personal allowance. Now wait. It's very important. Next thing is personal allowance. So as this employment income will be your total income, no other income. This will also be your net income because there is no qualifying interest, and this will be your ANI. This employment income will be your ANI because in this question there is no gift aid donations and there is no personal pension contribution by the individual. So your ANI is 121,884. Your ANI is 121,884. Listen, your ANI is 121,884. Okay. Now, as your ANI is more than, listen to me, basic things I'm telling you, is more than 100,000 and less than 125,140. So there will be some reduction working. There will be some reduction working. See how much it is less than income limit. How much it is less than income limit. 21,884 is the excess. 21,884 is the excess. Your normal personal allowance is 12570. Now you will be doing excess divided by 2. Excess divided by 2. Remember, excess divided by 2. So how much is the available? 1628. 1628 is your available personal allowance. 1628 is your available 1628 is your available personal allowance, adjusted personal allowance. Okay, 1628. So you can see it. Now I'll move into the main sheet of tax computation. I'm sure you guys know this thing. So your personal allowance is 1628. Okay, so taxable income will be in 120256. 120256. Okay, 120256. Now it is all pure non-saving, my dear student. It's pure non-saving income. There is no employment income, is totally non-saving. So now finally calculate the tax on non-saving income. So you know the first band 37,700. So your first band will be totally consumed definitely. So it will be 37,700 multiplied by 0.2. 37,700 multiplied by 0.2. Now, as this total taxable income is less than 125,140, so it will come in the second band. The excess amount will come in the second band, higher rate band. So it will be equal to, see the bracket open, 120,258 is your total, minus how much have you calculated, how much income you have calculated tax on. It's 37,700, bracket close, and now the tax rate is 40%. 33023. Okay, 33023. So you added, this is your final income tax liability. This is your income tax liability. Okay, this is your income tax liability. So just wait and check it out. It's not difficult. I'm sure many of students did this thing yourself. I'm sure many of you did this thing yourself. I'm sure, 100% sure. It's easy. If you have taken the classes, we have done more questions, much more difficult questions than these ones. I'm sure you know that. And I'm sure if you have made your notes, I often say in my class to make your short notes, your short summaries, which are very, very important, remember. And one more thing I would like to tell, that I have recorded a special class last quarter, like about the famous mistakes on F6, must watch that class. That's very reasonable class. It's worth watching, right? Okay, so my dear student, please check it out. See, this is the whole employment income P&L. This is the whole employment income P&L. See this. This is the complete employment income P&L and the taxable income, everything. And then this is the tax calculation, tax liability calculation. This is the tax calculation. Okay. And then these are the workings if you want to see. These are the workings if you want to see these. So nothing is difficult. If you are committed, you can do it. So it's time to say goodbye. I hope you like the class. I just request you to comment on my YouTube channel. If you like this class, just comment it. Okay, that's a tip from you guys. And also subscribe my channel. You can share this class with your friends as well. Thank you and take care.